Right, Ashu, thanks so much. TCS, of course, coming out after market hours. Meantime, all the other cues in terms of volatility, we'll pick up on those. Got a special guest joining us here in the studio, Mr. A. Balasubramaniam, CIO of Birla Sun AMC. Thanks so much, sir, for coming in this morning. Ashu was talking about the fact that this week could see the return of volatility after some very good runs over the past couple of weeks. Would you tend to agree with that?
Well, of course, it's right. I think we had a dream run of almost 3,000 points in the Sensex. Plus, I think some of the stocks have almost either is doubled or is gone up about 30-40% on average. Even the large cap companies have given such kind of return. So, expecting some bit of correction, some bit of volatility, it actually is fair. At the same time, I think we need to also look at from a different angle that global commodity prices, after seeing actually the good run, also is now I think taking some bit of backseat in terms of getting some bit of stability coming back. I think we need to look at the whole thing in a different manner. I think the volatility index, I think, which is nothing but a representation of what the kind of mood actually is there in the market, how it swings. And that is, I think, is coming down quite sharply. I think from about 44% today is dropped about 28%, is back to about 30 to 30%. While for India point of view, while the outstanding positions have gone up, the participation levels from the global investors have also been one of the primary reason that the market has gone up. So, as long as the portfolio flow remains the same, as long as the result for this quarter is more or less stable or maybe steady compared to the last quarter, I am sure the volatility would be relatively less compared to what we have seen in the past.
Right. So, just to talk about the domestic factors that we'll be watching out for this week, because 16 important earnings are expected. You've got the RBI credit policy, which is tomorrow. So there are expectations on that front. Elections will also somewhere continue to be on the back of the mind of most investors. So, how would you distinguish your key concerns and key factors that could add to this volatility in the markets that you're expecting this week?
Yeah, of course, yes. As you rightly put it, the events are now, I think, once again is gaining some kind of momentum. RBI policy, of course, I think the way liquidity is slashing in the system, and also the way I think they have been reacting actually to the various events that has been hitting the global market, global financial market, they have been successful in actually containing the volatility. I think the way we would see is from an RBI policy point of view, nothing negative or negative surprise should come for the market to turn negative. I think the repo rate and CRR cut probably may not come. I think we could only expect some bit of minor tinkering on the some of these policy initiatives, mainly from the credit flows point of view. And also, I think we could expect some bit of a direction from the RBI in terms of how to actually improve the credit flows to the system. And nothing beyond that we can expect from the RBI credit policy in this time around. I think the election, of course, is still the result is in the middle of May. I think it's too early to take a call that what kind of impact the election is going to have on the market. What we need to watch out, I think, going forward is how the portfolio flows is going to pan out, and then how some of these major companies' results are going to come. Also, we'll have to see, I think, how the Indian corporates are going to make use of the AS11 provision to adjust their profit actually for this quarter. If there is actually a significant change in the accounting policy, we might see some even a positive surprise as against some of these expectations which is there on the negative side on the results front.
So in terms of just the indices in themselves, we've seen some pretty decent turnovers in the market. Volumes have been good. Mid caps and small caps have rallied in many ways. Are you expecting to see some amount of that participation continue and those gains, at least stock specific, continue? Because at least that negative sentiment has gone away. So while the broader markets may be volatile, you would see mid caps, small caps, stock specific action continue?
Yeah, I think earnings momentum wherever is strong, we could expect actually things to come back to, people come back to buy into those stocks. The other way of looking at it, the run has been quite sharp. I think it came in a quick succession of about say 6 or 7 trading session. And as a result of that, a lot of people who are in the fence sitters actually missed this rally. I think the way we would look at is any corrections beyond say 3 or 4%, we might see actually people coming back into stock specific actions, or maybe people coming back to the Nifty. We might see actually a divergence where there will be a set of people who will be looking at taking exposure to the Nifty in the sense that Nifty index fund of mutual funds, or maybe a stock specific the action. We could also expect some kind of a divergence in terms of mid cap companies, the large cap companies performing completely differently what we have seen in the last 2.5 months.
Right. If you take a look at how the markets are doing, they are about that important 200-day moving average that most analysts watch out for. So, what would you advise investors to do right now? You did say that a lot of people have missed that rally, of course, because it was too soon to catch. But going forward, would you advise people to enter the markets? And if yes, what should they put their money in? Would it be large cap? Would it be mid cap? Should it be stock specific? Should it be earnings focused? How would you break that down?
Yeah, I think broadly from the economic activities point of view, we have seen the pain of about 1.5 years. and we also saw actually the G20 countries coming forward and taking a lot of action in terms of how to revive the overall economy. We could only take a bet that probably the revival of economy could happen maybe in the next 6 to 8 months in the global market. Plus India also, I think eventually I think could participate in that. If I think what goes by that belief, clearly I think the large cap would become one of the options for the investors, especially for the mutual fund schemes point of view, the large cap oriented fund. The other theme which I think has been working quite favorably for quite some time, especially the interest rates when it is coming down, and a lot of the dividend yields for companies have been remaining either intact or maybe it's much higher than the bond yields. So there is one of the theme I think which I think investors can look at is the dividend yielding theme, which are not only offers slightly higher dividend yield, which is tax free, it also has a downside protection in the form of value based investing. And these are the companies actually largely driven by the strong cash flows, strong promoters holding, and the ability to sustain the dividend over a long period of time is very, very high. That's another theme which I think we have been suggesting to investors that one should look at it. But the timing in the market is going to be very, very tough. But any downside, I think probably one should look at entering into the equity schemes.
That's a good takeaway. Thanks so much, Mr. Balasubramaniam, for joining us. That's a market view for the week ahead for you. We're taking a quick break, but we've got a lot more on the other side.
Of course, we've got a very heavy lineup following the break. It's the RBI credit policy tomorrow. We'll give you a preview into what we can be expecting. In fact, we've got Hitendra Dave of HSBC. He will be joining us, and a preview to the policy. We've also got Assi Seth of Reliance Equities.